What's up, everybody? Welcome back to Trading Wars. Thanks for joining me today. I hope you guys are having a wonderful day, my friends. We are here yet again for another recap on SPY. Today was a pretty good day, guys. We did catch some winners. So I'm going to be breaking it all down for you step by step. And I really wanted to focus today on the concept of the algos and the robots and why it's really important to kind of understand where they're trading. So that way you don't get trapped and that way you don't blow up your account. All right, so if you're ready, my friends, let's step into the war zone. First and foremost, let's do some shout outs. Cal, Neen, Dan, Bill, Jan, Briggs, Corey, Deepak, N7, Lead Farmer, Frank, Shannon, Luxury, Snapshot, Jay Villa, Anthony, David. What's going on? Trading Wars Army in the building. Good to see you. CDP, Trading Wars Army. What's going on? Okay. So let's go ahead and let's get into the price action today. Okay. So obviously yesterday we had this FOMC, we had this sell-off, and as expected, we did continue to go lower after hours, right? So we had that massive sell-off, and then we're gonna go ahead and draw the previous day's low as our reference right there, and the previous day's high as our other reference point. So here's our low. Here's our high, okay? So we'll go ahead right here, guys, and we'll hit the fast forward, bam, okay? So we gap down here, and the first thing that we see is we have this 3-minute bar. So let me go back to the 3-minute chart because that's where we started off on the day. So let me just replay this right here, okay? So obviously, guys, we're gapping down. And with the gap down, we're expecting an increase in volatility because anybody that was trading, especially anybody that tried to get long. So let's say that anybody during FOMC, they could have got long, they could be back holding, and also anybody that shorted. So let's say you shorted right up here. How would you be feeling on this gap down? How would you be feeling? So hit me with a 1 if you would be extremely happy, you'd be up money, or hit me with the 2 if you'd be sad. So put yourself in this situation so we can understand the psychology here. So if you shorted at the top of FOMC, right, and you wrote it down, and then the next day it gapped down here, right, how would you feel? Okay, so obviously you would be happy, right? You would be up money. So right here, because of that, so we have basically two meeting ideas here. The first one is the sellers of FOMC might try to lock in profits. Okay. The other thing we have is we also have institutional buying. Okay. Generally in the market, guys, if you've traded long enough, whenever there's a gap down, there's always a chance of institutional buying. And the reason is that large institutions and robots, algorithms, they look for discounts, right? So some of them are programmed, SPY gap down 1%, buy. Because that's a model that if you actually were to test it, right? If you were to test that model over 10 or 15 years, it has an edge, okay? So there's an edge to buying the dip over the long run, especially if you're investing, okay? So there's a lot of robotic algorithm style things happening here. So first, the sellers of the FOMC trying to lock in some profits, and then the algos on the dip buying side looking for institutional opportunities. So those are type of concepts that we could see here on the chart. So we have our first 3-minute bar here. So what I like to do is go ahead and hit an opening range breakout. Okay, so that's the first thing I like to do whenever I feel that we have that increase in volatility, we have that potential. So what is the opening range breakout? So the opening range breakout is I let the first 3-minute bar close, and then I just mark the high and the low. Okay, and it's a neutral pattern. Because if it breaks the high, I'm going to go long. And if it breaks the low, I'm going to go short. So I'm not married to a bias. I've let the price action walk me through. So let me just go ahead and walk you through my commentary in the morning. So you can see 1 minute to open. Let's go. Be ready. Keep the size small. Volatility is likely going to be high. All right, friends, I'm going to try the 3-minute org with small size to test the water. So at 9:33, we got filled long. Okay. So the 3-minute bar that came in right after that, guys, bam. So this was a crazy bar. And the reason was this. We had a big selling bar, and then the very next bar came and wiped that bar out. And that means that anybody that tried to short at the open, they're now in a trap situation. So how do we go ahead and take profits on this? So we just take our Fibonacci from the low to the high like this. Okay, and what I like to do is take profits on the 272 and the 50. So there's our 272. Here was our pullback. I'm going to talk about that in a second. Then we got to our 50 and our 618 right there. So once we get into this area, I like to go ahead and lock in profits. So if we go over to the futures, right? So let's go over at futures today. So futures, and I'll just show you how that looked. So let me go to the 3-minute chart. So right around here. So here was our entry right here. So we were able to get roughly about 6 or 7 points on this trade, which is equivalent to about 300 to 350 bucks. So not bad, right? Not bad to start off the day with that orb. But even before we got to the orb, we had a Fibonacci play that I'm going to talk about right now. Okay, but just go ahead, guys, and hit me with a 1 if that made sense. Okay, hit me with a 1 if that made sense. Did all of that flush in there? That concept of using the opening range breakout, we're marking the high and the low, and we're just using that as a way to enter the trade. That's mechanical. Okay, so when we enter the trade, we don't want to take the trade with a bias. We want to be unbiased because it could go either way. We don't know if the institutions are going to be heavily in, or if they're waiting for a bigger dip. We don't know, but we know there's a possibility. So we try to mirror our trading off of the algorithms, off of the robots. Okay, and so let's go ahead here, and I just want to finish off the commentary. So you can see first target, send me the rockets, target hit, next target, keeping stop loss at low of the day. I want to see a new high of the day here. Send me some energy, and boom, we hit the targets, done by 9:41. Really, really nice. So now we also had a opportunity to add on this trade, which we did using the Fibonacci. So let me show you how we did that. Okay. So the first little clue here is if we go to the 5-minute chart, you could see this a lot more clearly on the 5-minute chart with this wick. Okay. So whenever you see, guys, large wicks like that, usually that wick is not going to be done by a retail trader. Okay, that wick is obviously to move the market like that. So remember, the market was all the way down here. It was at 370.40, right around here, and then wham, it just shot right back up. So whenever we see that, we could say, okay, this looks like some type of institutional buying. Okay, so what do we do in that case? So what we did, guys, is we took our Fibonacci from the low to the high of this candle. Okay, and I'm just going to double click, and I'm going to put on the basic settings now. Right, so we had that push up, and then we loaded up on the 618. And not only did we have that beautiful 618 dip and we exploded, guys, but we also had the inside bar confirmation. So we had double. So we had that 618 and the inside bar. So we had two confirmations here, and I'll just go ahead to the Fibonacci and just show you guys this morning. So this, you could see there was that big wick, and then we got filled on the 618 long, successfully reloaded, and then we made that new high right there. Okay, so it was a really, really nice combination of trading with the opening range breakout and that first fib, and really nice, guys. So in total, easily 15-20 points if you add that 618. Really, really good way to start the morning. And now that's going to take me into the next topic about breakout. Okay, so let's go ahead here and just hit me with the 8 if that makes sense. So right off the bat, guys, within 15 minutes, we had 2 trades, orb, pull back on the fib, take it to the new high, already done for the day pretty much, right? You walk away, be happy, go about your life. You don't want to be a slave to the chart, right? Because you have mental capital, you want to be doing trading for a long time. You have to pace yourself at this game, all right? Okay, so from here now, this is where the second part of what I want to talk about with the algorithms comes in. So now notice where is the algorithm buying? So let's look here. The algorithm, we can look at the wicks and we can see all the buying is happening down here. So you can see on our 618. So the initial buying happened here, and then the Fibonacci came in. That was the pullback. There's more buying. Look at the size of the wicks. Okay, but what do retail traders do? What do most retail traders do? When this candle is green right here, when this candle is pushing up, they start to buy because the FOMO starts to set in. they're not taking good trades with risk reward. So we have the courage, right? If you go into our Discord, we have the courage to buy the dip. We have that courage. This candle is red when we buy. It's red when we buy because we know we're getting a good deal. So even if we're wrong, we'll take a loss. But we know we're not going to lose as much as somebody that is trading off of FOMO and fear. And this is where the FOMO comes in, right? So we break into a new high and you can see all the retail buying at the very peak. And this is where the algo, and this is where we are selling, right? Because we loaded up on the 618, we loaded up here. When we get the new high, we're selling, and then they get punched. And it happens so often. And that's really what I wanted to talk to you guys about in this video, is that sometimes this is going to work. Like sometimes if you want to go ahead here, guys, and you want to do your flags and whatever, sometimes it's going to work, sometimes, right? But the majority of times when you keep chasing these highs, there's going to be that one time where you don't have your stop loss, or it doesn't even matter. If you trade this and it works maybe 5 times in a row, all it takes is one of these trades to wipe out your gains completely because your risk to reward is inverted. You might be making $100 on this pop, whereas we're making $300, $400, $500, $600 because we're buying on the 618. We're getting the discount. Okay. So does that make sense? That's what I really want to talk about the robots. We can look clearly here, right? If I go ahead and I add my full extension here, we can see, like, you know, I don't put the full one on all the time because I don't want to confuse you guys, but these are little tricks. Look at this, right? So we go from the 618 exactly back up to the 272. Okay. We go from the 618 to the 272. So what's 272 plus 618? What's 272 plus 618? Somebody tell me. What do you guys think that is? So this right here, guys, I just want to show you that it's mathematical. It's algorithm. Imagine this. The algorithm buys on the 618 and it sells on the 272. 618 plus 272 equals 1. These are all mathematical formulas, right? If you see the details in the chart, guys, if you use the fibs, you can start to understand these things. That's why, remember when I took the orb, I'm always selling some on the 272, selling some on the 50. I'm selling some with these targets in mind because I understand this is the way the algorithms are trading. And that's the knowledge I want to share with you. So why would you want to be the person buying here on the 272 when you know the algo can be completing its leg from the 618 to the 272, and then you're just going to trap yourself? Okay. All right. So I know that's a little bit advanced, but hit me with the 10 if that makes sense. And guys, while you're at it, you know, these things, I really want to say that I've only learned these concepts by losing money. Okay. I lost a lot of money when I first started trading, you know, over 20 grand. And because I used to be the one that buys the breakout here because I thought it was a flag, I thought it was this or that. And when I just started drawing the fibs, I just started to say, well, where's the turning point? That's where I started to come up with these levels, like the 0.1 and the 0.169. Those are not fibs. The 10% and the 0.169, those are things I created on my own. Everything that I'm sharing with you guys here, I created on my own, you know, from trading, because you have to be trading to really get this, right? If you look at this in a textbook, it's not going to be the same because the markets are always changing. Okay. So from here, you know, drop a like, guys. Drop a like if you like the content. You know, I really try to share my journey with you guys. It's been a long journey, trust me. And it's been a lot of ups and downs. And it feels like I finally realized a lot of things. And my job is to kill your learning curve. Okay. You don't need to have that learning curve. You don't need to lose that money because I'm teaching you ways to protect your money. Right. That's my mission. Okay. All right. So let's continue. So after that, guys, you could see that we had this clear push down. So what we do from there is we go ahead and we draw our fib from the downside, right? But what we did today is instead of doing this opposing leg, we waited. And the reason why we waited today is you could see here, this was around 10 o'clock. So we gave it a little bit of time for this to develop, knowing that this algorithm already traded, okay? So this leg already traded, right? So we had that push up, pull back, and extension. So normally whenever we have that completed leg, we could do random things after that, because you have to understand the algorithm already made the money, right? They already made their money. Maybe they're out. So we waited for a little bit here, guys. And luckily we did, because you could see that we kind of just reversed straight up. And then once we had this leg, this is when we went ahead and we drew our afternoon. So we also wanted to wait a little bit closer to the 11 o'clock mark. Just today, we just saw that this algorithm already traded, so we decided not to take this leg, keep this leg, and then draw this low to high like this, okay? And then from there, so we continue to go a little bit higher here. Just go ahead and move up your anchor like this, and continue to just move that anchor for the afternoon. And then we finally start pulling back right here, okay? And then right after this, we tag the 50. So remember, I told you yesterday, the theme this week has been the 50%, and I don't like trading the 50 cents. I don't like trading the 50% unless it retests it twice. So you can see we popped up here and we came down right there for that double retest. We had that little confirmation hammer, and that pushed us up straight into up against the previous high. And again, what happens over here? So right over here, again, the retail get the FOMO, the market is going out without me, and then we just, you can see here, we poke into a new high, and then we hit that 10%, right? That's why I have the 10%, because I've seen this a lot too. We poke the 10% and then we push down. But this is where the retail is stuck buying, right? Instead of buying over here on the 50, they're buying up here. And with those type of strategies, guys, no matter how good of a trader you are, you're going to lose money, right? You will, just because of the risk reward. If the algorithm is math-based, we need to be math-based, right? Because look, I could go ahead and I could draw this for you, right? I could say, all right, here's your flag, there's your breakout right there, right? You see this over and over again, right? And then there's your confirmation. Boom, we buy the breakout right here, right? Hit me with a 10. Hit me with a 10. Does that look familiar? Is that what you see a lot, guys? Here's your pennant, your this, that, breakout. Yeah. Let's get in. Bam. See? So I really want to show you guys the power of using the mathematical base, okay? The math base is using the percentages, the retracements, and the extensions. Use those tools. It's going to greatly help your risk to reward. All right, guys. All right, and yeah, that's pretty much it today. Very, very clean day. Even though it looks like a little bit choppy, guys, we're able to make good money. So now we are, let me just go ahead and do a quick recap. So on Monday, we didn't take the orb. Monday was an inside day, so we didn't really do much. We made money on the orb on Tuesday, and on Wednesday, we made money on the trigger. And then on Thursday, today, we made money on the orb and the fib. So, this week, we've pretty much been up every single day. Monday was a little bit slow, right? Monday was a little bit slow, but the rest of the days of the week, we've been doing really good. So tomorrow is Friday, and we're going to be going for Lotto Friday. We're going to be going for our perfect streak. Okay, so hopefully you guys wish me some luck here, and hopefully we can just nail it tomorrow and just have a perfect weekend. That's what I look forward to. That's how you're performing well. Okay. All right. Okay. So that's it, guys, for me. As always, check me out, tradingwords.com. That's the place to be. If you get any one of our 3 books, you get 1 month for free. Come trade with us live in the Discord tomorrow. You'll get 30 days and my golden indicators, Nirvana indicators with premium alerts for life. Once you get the book, you get those for life, guys. And right here is the Fib book. Everything that I just talked about there, you could learn. And also, if you want to learn more about the orb I discussed in detail in this SPY options mastery book. You can see opening range, breakout, 3-minute, 5-minute, and 15-minute chart right there. We have a lot of examples, and we put a lot of time into this for you guys to learn. Or you can sign up right here on the main page for the main subscription. Otherwise than that, guys, that's pretty much it for me. Futures right now, if we were to look at it, is we gap down. You can see here's that little gap. We came back, rallied, filled the gap. We just put in this Ragnarok and are selling off right now. We also had this Holy Grail that's been selling off. So 2 nice patterns overnight. Let's see what that brings. The way it looks like right now, we could definitely gap down tomorrow unless we rally in the next few hours before the morning. Otherwise than that, thank you very much for your time. Please comment, like, subscribe. If you leave a comment, you have the chance to win the giveaway. We'll be doing one on Sunday. So please do leave your comments. And thanks, guys. Thank you so much. All right. Have a great night.